Hey folks, yesterday we saw a brutal correction in mid-cap and small-cap stocks. Now generally I don't track daily movements of index and reason for upside or downside because that is part of investment journey. My major focus is always on research to study great businesses. But yesterday correction was very sharp in mid-cap and especially in small-cap stocks, and there were many rumors around reason for this deep correction. So I thought of quickly sharing my viewpoint. First of all, I came across a widely circulated WhatsApp University message where an FII Society General has fired one of his fund manager involved in front-running case and liquidated nearly around 4,000 crore worth of mid-cap and small-cap stocks. When I tried to find the authenticity of this news, I could not get any confirmation. Now today, when I checked the FIs and DIs buy and sell pattern for yesterday, it's showing that on 12th September, that is yesterday, FIs have sold equity worth rupees 1047 crore and DIs have bought equities worth 259 crore. Although this data does not show the granular breakup across your large, mid and small cap, but clearly this data is not showing the selling of 4,000 crore worth of equity from FIs in mid cap and small cap. So that's point number one. Then second widely discussed reason for deep correction is newly published report from Kotak Institutional Equities that went viral where it titled Madcap Dash. This report mentioned that in the last few months, mid-cap and small-cap stocks have rallied a lot, but there is no meaningful change in the fundamentals. In fact, in many cases, fundamentals have worsened. So as per this report, the primary reason for this rally is irrational exuberance among investors with high return expectation driven by high returns in the past. Hence, they are dropping their recommended mid-cap portfolio as they don't see a decent upside potential in near term. Now that point from Kotak regarding irrational exuberance seems fair. If you look at mid-cap and small-cap index, since the March lows, BSE mid-cap index has jumped around 41%. That's crazy return in less than 6 months. And BSE small cap index has jumped around 47% in the same period. And this rally is even crazier at individual stock level. See, we have been talking about the huge potential in Indian economy and its bright growth prospects. And there's no doubt that Indian stock market would continue to create wealth. But in between, we would continue to see irrational exuberance where people get carried away with past returns and the stock jump too much as compared to the fundamentals. Kotak in its report even discussed the individual sector and mentioned that sectors like capital goods, defense, EMS, railway, real estate and renewables have delivered eye-popping returns in the last 3 to 6 months due to the broader investment narrative. It says that while it expects a decent investment cycle, it is not sure about the quality of many of the stocks from these sectors given their historical weak execution and governance track record. In addition, many of these sectors fall in the B2G, that is business to government or B2B categories, which raises issues around the execution and profitability. Kotak report says that market expectation for both revenues and profitability may be too optimistic around these sectors. Then it discussed about stocks that falls into turnaround stories. Although it did not mention any specific name, the report says that many of these companies have been through serious operational and financial challenges, including bankruptcy in the recent past. But the market has high hopes of these companies doing well in the future. Hence, they are not sure of the basis of market's confidence. Now, personally, I also have this concern around the turnaround story of many of these companies. I don't want to name them, but personally, I stay away from such stories. So these are the two major topics of discussion after the sharp correction in the broader market. In addition, I also see a couple of more macro level challenges. First one is rising crude oil prices. Last year we witnessed crude oil crossing levels of $110, resulting in huge inflation problem and high cost of operation that badly impacted the operating margins of many companies that depend upon oil and its derivative as raw material. However, oil prices fell down sharply and touched levels of around $70 early this year. But again, the crude oil is touching levels of $90. So that is one of the major macro level concern. Apart from this, the global slowdown in US and Europe is not yet over. Interest rates in the US are at multi-decade high levels of 5.5% and US Fed has clearly mentioned that they can even increase the interest rate further if required to reduce the inflation below their target of 2% level. Overall, I think that the biggest reason for deep correction in mid-cap and small-cap sector is due to sharp rally in the last 3 to 6 months. And when you have that kind of rally, traders just need one reason to book profit. Again, we don't know who exactly booked profit, but clearly there is heavy selling in mid-cap and small-cap that created panic among investors. Now going forward, I expect the mid-cap and small-cap sector to cool off a bit, which is actually healthy for the market. I still see good potential in selected large cap, especially in your large cap banking stocks like your SDFC, ICICI, Axis, as well as Kotak. And I also see decent value in IT large caps like your Infosys, TCS, HCL. Having said this, my only suggestion would be to not panic in this correction. It's part of stock market journey. I've been saying that we are still in the early stage of a bull run and next 5 to 10 years are going to create huge wealth for investors. Provided you identify fundamentally strong companies and make a right balance across large, mid and small caps. Any correction should be utilized as an opportunity to invest systematically. I don't want to stress this video further, just thought of giving my 2 cents on current market condition. Normally retail investors panic a lot in such corrections, especially the new investors. But it's very important to have a control over both greed and fear. And more importantly, remain invested with patience and conviction. Thanks for watching this video. We'll catch up in the next one. Till then, take care.